QuickBooks Pro Desktop 2021. Fixed asset items, purchase and finance, work truck. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our fixed asset practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're going to now record the purchase of a work truck, and we're going to record that, and we're going to refinance part of the work truck. Last time, or in prior presentations, we set up our fixed assets. So if I hit the lists drop down, the chart of accounts, we set up our fixed asset for the automobile. So we're going to be putting this truck into that category for an asset which is going to go on the balance sheet because it's a large purchase that we're going to be taking care of. Now note, when you purchase something like a truck or an automobile of some kind, it's going to be a large purchase, and it can be a complex purchase. There could be other things that would be involved in it, such as financing, such as a trade-in or something like that. As a bookkeeper or as someone doing your own bookkeeping, you might then ask or treat this a few different ways. For example, a bookkeeper might have a system set up with the CPA firm or the tax firm that would then say, hey, look, I'm recording everything basically on a cash basis system. I'm going to record how much was paid for it. I'm going to give you the information of the purchase of the truck, and I'd like you to make the adjustment to it at the end of the time period. In that case, then, we would record simply a credit to cash, a debit, or a payment, a check would go out, and the increase would then go right here to the automobile, not for the full amount, but just for what we paid for. Then we would give this information to the CPA firm, along with possibly, if I go to my lists drop down and go to the fixed asset item list, we would list out the truck here, listing out the truck and possibly putting in the notes that we have purchased this truck and only put it on the books, basically at the cash basis, and we would like you to make an adjusting entry to record the loan that's going to be involved on it, any interest that's going to be involved on it, and so on and so forth. And if there's a trade-in, we would mark the trade-in, the truck that we traded in, so that you can decrease or take that item off the books. So that actually works quite well oftentimes if you're working well with your accounting firm, because otherwise they may have to do the adjustment anyways. Meaning, in other words, if you put the adjustment on the books in a way that doesn't line up to either financial accounting or the tax accounting, then the accountant just basically has to double the work anyways. They'll have to reverse what was put on the books, reverse the transaction to put it on the books if it wasn't done properly, and then they would have to put it on in the proper way, right? And that just kind of doubles the work. So, and oftentimes that could be a way to go. If you're a bookkeeper and you're working with an accounting firm, you use your lists here to list out what you purchased, and then you let the accounting firm know that how you recorded it on basically a cash basis possibly, and you would like them to record the loan and then the related, and then record it on the books and give you basically the adjusting entry for it to record it. So that's one way that you can record this. Now we're going to put it on the books for the full purchase amount, and we're not going to have too complex of a transaction. It's just going to be basically a loan for it. We're not going to have a trade-in or anything like that. So at the end of the day, what we want to then end up happening is we want the chart of accounts to be going up for the amount that was purchased, or the purchase price of the car, the actual cost of it, including the loan and the down payment that we're going to put on it. And then we want the fixed asset schedule over here to reflect it as well, so we can provide this fixed asset schedule to the tax preparer at the end of the year, who can then calculate the proper depreciation for us and then give us the depreciations that needs to be recorded periodically, monthly or yearly, so that we can record it in our books. Okay, so to do this, if I go to the home page, there's no form here that's designed specifically for purchase of equipment, because equipment's something we don't purchase all the time. But because cash is affected, then of course we can use the check form here, because the checking account is decreasing. So I'm going to use a check form. This would work even if we had an electronic transfer. I'm going to say this happens on 02/16/21, and we're going to say we're purchasing it from Ford. I'm going to say Ford. We're going to buy a Ford F-150, and we're going to say that the purchase price was $45,000. So I'm going to say purchase price $45,000. We're paying 20% down, so times 0.2, we actually paid $9,000. So we're going to say that we're paying $9,000. The checking account's actually going to decrease by $9,000. Now the other side of this transaction, we would like to use the items to set up the item, because that'll help us to set up the item on the fixed assets as well. You don't have to do that. Let's not do it first and show you how it would work, and then we'll go and use the item. So if you were just to record the expenses, meaning you're just going to record it and hit the actual expense accounts, then you can use the expense tab over here. So we're going to say, all right, well, we know that the asset of the car, automobiles, needs to go up by the full price, which was $45,000. And then the difference is going to be a credit, which is represented here with a negative number, or is going to have to go to whatever we finance, a loan. So I'm going to call it loan on the truck. I set up this account already. So just note, if you need to set it up, it's going to be an other current liability account, or in other words, a loan account. So you'd say you hit loan truck tab, and then it's going to ask you what kind of account. It's a loan account or an other current liability account. And then you set that up as for the $36,000. So this would be the basic kind of transaction you did. Now, if you recorded this, you would increase the assets by the $45,000, and it would not then be reflected on your fixed assets list over here. It wouldn't be reflected on your list. Now, the list you can build separately, so if it wasn't reflected and I was to record it that way, it's not the end of the world, because then I can just simply add an item. I can say add the item, new item, and then I can record the fixed asset here separately. I can do it in two steps, two different stages. So if you were to do that, it's not too bad, because you could still line it up, right? If you were to just record the check for, say, the cash that was paid, the $9,000, and then you wanted to tell the accountant that you just recorded the amount that was paid, I would still go to your list over here and record the list item, possibly for the full price, so that the accountant could then say, oh, these two don't line up. What happened here? We just recorded the cash amount. We want you to make the adjustment for the loan and whatnot. So, right, and that would give them the indication to do that, to make that adjustment, because we're going to say these are the fixed assets we purchased, and it won't line up to what's on the balance sheet until you make whatever adjustment you need to make. So that's one way you can think of it. Now, the other thing we can do is say, okay, I'm not going to put the automobile expense here. I'm going to use an item to do that. So what I'm going to do is I'm going to delete this one. I don't want this line. I'm going to leave the loan, and then instead of just hitting the account itself, which doesn't include a transaction to the subledger, we're going to use the items in a similar way as we would use basically the inventory items. So I'm going to go over to the items over here, and then we're going to be adding an item. So when I add the item here, it will also add it to our lists on the left-hand side, so that our list amount should tie out then to what is on the balance sheet. So I'm going to then go to the items, and I'm going to say we want a new item. So I'm going to set up a new item, and it's going to be a fixed asset type of item that we're going to be setting up. And I'm going to call it a 2021 F-150 Laureate. And then I'm going to say we might want like the last 4 digits of the license plate number or some kind of identification number for it. We need to indicate whether it's going to be new or used. This is useful to provide to the tax preparer, because that's what we are really aiming at, because there might be a difference between like special depreciation and 179 depreciation deductions for taxes based on whether it be used or new. Then the date that we purchased it, I think, was 02/16/21 we said, and the cost is going to be $45,000. That includes both the cash we paid and the loan, or in other words, that includes the purchase price of it. We purchased it from Ford. We're going to say that the description down here, I'm just going to put the description there and there as well. The account that it's going to go to is a fixed asset account. We have the categorization of the auto and transportation, because we wanted that to line up to what's on our depreciation schedules provided by the tax preparer. Location, I'm going to just say office. And then the serial number, you want to make sure to have a serial number or identification number and license number and whatnot in here as well, so that you can identify specifically which F-150 you're talking about, in case we have more than one. We only have one, so it's not too difficult. But if we had more than one, which we hope to in the future at some point, then you want that. So I'm going to say save or OK. And now this still is in balance, even though it looks somewhat complicated now, because the checking account's going down by the $9,000. Then we have the assets going up by the $45,000, which will be shown on both the balance sheet in the account of the automobile, but it's not going to that account here. You can't see that here. It's driven by the item. So the item then is telling it that it's going to be increasing the proper account, which is the auto. an asset account, it will also be adding it to our list over here so that our list will then tie out to what is on the balance sheet. Then on the expenses side, which is really the account side, this isn't an actual expense. The expenses really just means anything where you don't need a sub item, a sub ledger. And we're going to be increasing, represented by a credit here, negative $36,000 to the loan, which will be a liability account. Let's check it out. We're going to say save and close, and yes. And then in our lists, we see our automobile line up here. So that's nice because we could provide this list then to our CPA firm or a tax preparer. Reports drop down up top, company and financial. Let's take a look at the balance sheet standard now. Changing the dates, I'm going to go to the customized reports to do so from 01/01/21 to 12/31/21 and OK. So now we have the information in the automobile transportation equipment. It's in the fixed assets. Now, when we provide this information to the tax preparers at the end of the year, we would like these items to line up to what is on our reports on the fixed asset item list. And more specifically, we want to make sure that we know the detail for the increases and decreases, the purchases and disposals or sales of the fixed assets that happened in the current year, because the tax preparer already has the prior year information on their schedule. They need to know what changed, what the difference is. So we then can find that difference here by double clicking on this, and we have our activity. One way you can do this is provide this to the tax preparer, where we have the nice memo here, which is giving us the more detail that we want to record this stuff line by line. So that's one way you can give them the transaction detail reports. Or, which would probably be better now if you're tracking this properly, I'm going to close this, you provide them with the fixed asset list. So the fixed asset list then, here, if I run a report on this, is now sorted by account, which is the grouping of the sorting that we'll see on the balance sheet. And we don't have the sub items, which is kind of annoying here. It kind of be nice if they did, but we can easily get that by doing an Excel worksheet or just adding this up. Now, if your total doesn't add up here, like if your total automobiles don't add up to what's on the balance sheet, it may not be the end of the world. The report may still be useful if your current information, the current change, the current increases and decreases lines up, because that's the more detailed information you need to provide to the tax preparer, because again, they already have the prior year stuff. So if you haven't been lining this up properly, or some prior bookkeeper wasn't in prior years, it's still useful to do it from this point and then going forward. So because the changes are really the items that are important. And if you want to line it up again, you can do so by taking the depreciation schedules from the tax software and entering the costs into basically your system, so that when you do have a disposal, you can show that. Also note that if you go to the fixed asset lists over here, if you were to do some other method, meaning let's say you were on a kind of a cash basis and you recorded that transactions, rather than recording the loan amount, you just recorded the $9,000 amount, which would increase basically the balance sheet here by $9,000 instead of $45,000, would not record the loan. And then you told the tax preparer, hey, here's the purchase documentation, here's the information for the purchase. I want you to record the difference, including the loan amount here, and record the automobile amount properly. I'm just going to record the cash payments on the loan. So I just have the payments on the loan. I didn't record the loan itself. And I want you to make the adjustments for interest and whatnot, and the amount of the truck. Then you can do that method. And then to do that, you'd still want to provide this worksheet, which would possibly list it out at the $45,000 to give them the double check, saying, hey, look, this is what the purchase was $45,000. Yes, that doesn't tie into what I put on the books, because I put it on the books just at the cash amount, and I would like you to do the adjusting entries. Then provide me with those adjusting entries so I can add them on my side, and for the automobile, for depreciation, and for interest expense. Now you can also print this report out. So if you were to print this at the end of the year, you would do, or I would export it actually. Well, let's do it. You go to reports drop down. You're going to go to the fixed asset list. It can also be found under the reports drop down up top under lists, and then you want to go to the fixed asset list, which is the fixed asset list. I'm under lists. I don't see it. Oh, there it is right there. Fixed asset listing. So two ways to get there. Then I would export this report, and I'm going to create a new worksheet to do that. So I'm going to export it to Excel, and that'll help me to give me the subtotals that I would want. And I'm going to export this out. And then I would just add the subtotals, meaning here's the 45,000 for that category, and here's the sum of all the equipment that I have at this point. So this should line up to the cost, 45,000, 6,007, that is on the balance sheet over here. For the 45,000, 6,007, if I added the whole thing up, I should get to the 51,7. If I add the whole thing up here, I get to the 51,7. Now, if the whole thing doesn't add up, because again, you didn't do the prior periods, if you have this information for the current year, for the current period, the change, then that's going to be the important information that you want to provide to the tax preparer, because this is the detail they're going to have to enter basically into their system, and you want to make sure that you line it up, you know, line by line, so they actually enter each line into the system so that when you sell them and dispose of them, then you know exactly which ones were disposed of, so that when you try to figure out how much accumulated depreciation to apply to them at the point of disposal or sale, you can get the proper number for that.